Well, coming back to the business law course, and this is the third part of the topic banking law. Still with me, your lecturer, Jonathan Andy speaking. At the previous part, I've told you about the main activities of bank, and one of them is to channeling the money that the bank collected from the society to the society again, and the form of the return by the bank is called a credit. So credit in the bank is the provision of money or equivalent claim to money based on a loan agreement between a bank and another party, obligating the borrowing party to repay his debt after a certain period with interest. So here is the bank, and here is the debtor. So the debtor, remember the concept of the legal subject. The debtor could be individual, or the debtor could also be a legal entity. Let's say a PT. This is legal entity. So those parties, those subject need money. Could be for anything. Could be for business. Could be for other purposes. But the point is they go to the bank asking for some credit. So the bank would make some assessment. So if they approve your proposal, then there will be a credit agreement here. So the conduction of this fund is based on contract. So that's why I deliver you about contract in the beginning before we discuss about more specific business activities, especially from the perspective of law of the business. So it's all based on the contract. In this contract, it will be shown the amount of the money, the mechanism of the payment, and the penalty, the sanction. So whether the bank or the debtor, yeah, the bank is the creditor, is not doing their obligations, so they are devolved, right? Remember about the contract concept. So here you need to know your right and your obligation based on the contract. That's why if you are a businessman, you are an individual, before you signing a contract in the bank, make sure that you read it first. Even though it's been a quite critical problems for years, that in the bank, the contract is a take it or leave it contract, right? It's the clause you cannot change. So they already have the format, the default of the system of the credit. So you want to take it or leave it. That's why you still need to read it. If you think it's okay, so you can sign it. Otherwise, you need to leave it, right? So the basis is the contract. So if you understand contract law good well, so it would be much easier for you to understand about this. But besides that, the other legal aspect that I'm going to tell you is about what if you are a bank. So now I'm talking about you in the perspective of the business actor who gives the money, and you are the bank. The bank, before you approve, you must make assessment, right? It's called principle of credit, and I'm sure that you already learned about it in your business school, that the bank, before they approve the individuals or the company proposal, they have to take a look at the character, right? The character of the applicant. So that's why there would be some interview, you will be asked to come to the bank, there will be some discussion, some talks, and even maybe they will ask you about some uh, financial situation of yourself. But the ideas of the talkings of the finding of information that done by the bank is also try to find your character, because from the interview, from the discussion, they could make an assessment whether you are reliable or not, whether you are trusted or not. The second one is the capacity. the bank would consider your capacity as one of the consideration whether they are going to approve or reject your application. So the capacity is talking about what you are capable of. It's talking about your background, your experience. So if you're asking the money, 100 million, to open a business in culinary, so the bank needs to know, do you have a capacity to make this business or not? That's why they would try to find information about your education background. Will you go to any culinary school or not? And have you have been experienced in doing this kind of business, or maybe you work as a chef, a cook, or a helper in a restaurant? Then if you have nothing related to this, just because you want to, just because you think this is a good idea, then the bank would say that you have no capacity. So it's just a speculative business. So it would be very, very dangerous for the bank, because potentially the money will not be returned back by you because you have no capacity to use the money. So that's the second assessment made by the bank. And the third one is the capital. So how much money, or what is the other capital that you have to make your idea of business would be true. Let's say that you are going to do a business, and the money that you need based on your calculation to do the business is 200 million. You're asking for 200, I mean your business is need 200 million, and you're asking the money to the bank based on your profile, for example, is 100 million. So the bank needs to know, do you have the other 100 million? If you say you have nothing, then giving you 100 million will be just vanish in vain, because you have know the difference, the 100 million. So the point is the business idea will not be realized because you don't have enough capital. So it would also be the consideration if you are a bank. And the third one is the collateral related to the capital. The bank would also asking, do you have any collateral? Do you have any some goods or some asset that we can execute or we can auction once you fail to pay the debt? So if you're asking for 100 million, they are going to ask you, do you have something worth it more than this? Yeah, usually they will ask for something that worth 130%. So if your application is asking for 100 million, so maybe you can use your house or your car or the other asset as the collateral, jaminan in Indonesia. And the fifth one is the condition of economy as well as the current society's life. So the bank is going to know what is the money for and whether it is appropriate with our current condition of economy. For example, nowadays in the corona, you are going to asking for money to the bank, 100 million. What for? You say you want to open a restaurant. Well, currently gathering, yeah, is prohibited. So making a restaurant is not a quiet respected and also not a quiet beneficial to be made. So potentially it will get lost. So the bank would consider the idea is not coherent with the current situation of economy and also the society's life. But if you're asking the money to produce the mags, for example, or another equipment to protect personal's physique from the coronavirus or other virus, for example, so I think it will be a plus point for the consideration. So why does the bank need to be careful before they give you the money or not? Because it's also related to the business and also the law. If the bank already conduct all of the assessment and then finally you got fail or the credit is become a bad credit, which means you cannot pay, then the bank, if they already insured this credit, then this credit would be paid by the insurance. I mean, here is the insurance company. Let's say, for example, Jamcrindo, Skrindo. Yeah, this is a company who give insurance for a credit. But if the bank doesn't fulfilling a prudential principle in analyzing the application of the customer, then it's the default, and also it's the fault of the bank. So the insurance will not pay the money to the bank. So those are two main ideas that I'm going to deliver to you here, that the credit is based on the contract. So you have to know the contract before you signing. Make sure you understand it. If you don't understand, you ask to the bank, make a confirmation. And if you think you can do it, you sign it. But remember, the contract becomes the law for you and the bank. So you have to follow it. You have to do the obligation based on the contract. Otherwise, you could be sued to the court. So that would be you're responsible to pay the money. And also, if you are the bank, you also have obligation to fulfill your liability in giving the money to your clients, to the debtor here. So the debtor uh, could give you some sorry, forgive, could give you, I mean, the bank need to manage the liability. They have to pay the money that they already approved. And also, if you are the bank, you have to make sure that you already make a good assessment to the clients. Then uh, you can you can be protected by the insurance. Okay, I think that's it for now, and we'll discuss the further discussion after this. Thank you. God bless you all. See you. Bye bye.